Hello and welcome to Crux Investor. This morning we spoke with Dave Reeves, CEO of Calidus Resources, ASX gold developer, following their debt facility raise with Macquarie Bank. If you want our thoughts and opinions on that deal, the conversation, and indeed the company itself, you can get that at cruxinvestor.com/club. Where you can also find detailed company reports, commentary from market experts from around the world on a variety of commodities and companies, our training videos. There's also summaries of other interviews that we've done just to save you a little bit of time. And of course, there's our thriving community of investors sharing their thoughts and ideas with each other in a nice, safe environment. So do go and join them at cruxinvestor.com/club. And of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about today, take a look in the description. Dave, how are you doing, sir?
Very good. And you, Matthew?
Well, I think you'll be doing better than me. You've got some good news out today. Well done. Congratulations. You must be pleased.
Thank you. Yeah, we're very happy with it.
All right. We're going to hear all about it. So first of all, why don't we kick off? Give us a 1 minute overview of the business for people new to the story, and then we'll get back to that headline story.
Sure. So Calidus is developing a new gold mine in Western Australia in the Pilbara, targeting average 90,000 ounces production per annum at a low all-in sustaining cost of $1,290 Aussie an ounce versus the current gold price of just under 2,500. 1.5 million ounces in resource, open at depth, open along strike, lots of good exploration potential there. But main focus is building the mine, construction underway, but main construction kicks off next year.
Fantastic. And to do that, you're going to need some money, which you sorted out, $110 million with Macquarie. Go on then, tell us all about it.
Yeah, so look, we've done an extensive process, global banks, funds, local banks, funds, had a lot of people in the data room chatting to a lot of people, narrowed it down to a couple of groups, and Macquarie was just a standout for us. They are based here in Perth, makes life very easy in that regard. They offer the full gamut, so that's not just the money, but hedging as well as a downside protection risk from a risk point of view. So that was good. They've done really extensive due diligence on us. They've commissioned their own resource model to double check ours. So there's an enormous amount of DD that they've done, and we think the fit is very good. And the quantum that they're offering, that 110 million, is fantastic. That means less dilution to shareholders, but we believe still easily manageable from our cash flows.
So do you think it was expensive? Would you classify it as expensive but worth it? Because you've got 100% debt. I mean, which is phenomenal, okay? And you know, in this day and age, I guess getting all the money up front is obviously non-dilutive. Your shareholders are going to be pleased with that. Is this something that you consider expensive and that you want to refinance as quickly as possible?
No, certainly not expensive. And I would point out we do still need equity contributions in there. So the 110 mil is for the project, but there is financing fees, cost overrun facilities, etc. Equity we've been putting in. So not quite 100% debt, but certainly good leverage. I think we had the discussion last time, Matthew, about it's not actually the cost of the debt that was our driver. It was the quantum, and that affected the NPV per share. So the cost, we obviously compared it to the other offers that were there for similar quantums, and cost-wise in comparison, it was very compelling.
Right. Okay. So they've made you put this hedging component in to obviously hedge their bets on this as well. Do you want to talk through the sort of terms and timings on all of this? Because I think some people, I look at the chat rooms and so forth, there's a lot of conversation as to whether Macquarie is a lender of last resort, I think someone used the phrase, or is this completely your choice?
Oh, look, it's completely our choice. And I've received an email from someone, I think one person put up a comment about Macquarie. Macquarie has done an amazing amount of very good financings around, and a couple that were drawn attention to were projects that didn't achieve what they said they would on the box. And when that happens, a bank, no matter who they are, steps in to protect their investment. So, I don't think people should be confused with that. Macquarie have financed a lot of the gold mining companies. They financed Reeves, that is Resources here in Australia, big company when they started off. That team's moved on to Capricorn Metals. They're financing them because they've obviously worked well together. So, no, Macquarie is, I think, a gold standard in financing and certainly not a lender of last resort.
Okay. So how much more money will you need to pay for the legal, the administrative, all of this kind of paperwork and documentation around the transaction that you've just done with Macquarie?
Yeah, look, that's not a huge cost at all, and we factor that in with the interest rates, the hedge margins, all the other costs, and we come up with an overall cost of that facility that includes all of the above, and that's what we compare between the offers. And obviously, there's certain things that are confidential that you can't go into. And all I can comment is it was very competitive.
Okay, right. Okay, so it's competitive in the sense of how many offers were on the table? How many term sheets did you get?
I think we had 40 people sign up CAs or 40 groups. I think we had about 14 indicative term sheets. That was from banks, funds, and I would classify Macquarie in between our conventional big banks here and a PE sort of fund specialising in mine finance. They sort of bridge that gap. They are a bank, but they've got more risk appetite than a bank in general, which allows them to increase quantums. But with that does come a cost, but not nearly as high as a PE fund.
Okay, so you've kind of, what were the terms actually? Because I was trying to work out whether you had some sort of kind of holiday period factored in there. Can you tell us that?
Yeah, so we'll be looking at drawing down second quarter next year. We've got about, call it 15 months before we start paying back. So we've got that window before we start paying back. Then it's 3.25 years to pay that back once we commence in June 2022.
Okay, and I noticed some degree of flexibility with regards to what you can do with the money as well.
Look, all of these facilities, no matter who you go with, are the same. They've got this waterfall where as you produce cash, they go into an account to service a debt. When there's enough in there, it goes into a reserve account to make sure you've got enough to service a debt. If something goes wrong, then it flows down into another account, and eventually the proceeds are left over. And certainly in our modelling, it's going to happen pretty quickly. You can start to split that. Now, the banks will take a portion of that. We'll take the lion's share. They'll take a portion, and we'll pay that loan back more quickly than we're currently allowed in the 3.25 years. But we will be able to harvest cash back into Calidus to do other things along the way, assuming we are generating that excess cash.
Right, and what's your preference, or what's the board's preference in terms of how it treats that overflow? Because you want to refinance this out on better terms, presumably, or start to pay it down from production. How are you going to treat that overflow of cash? Keep it and sort of explore, create more value?
Really depends where we are. Blue Spec we are looking at acquiring. That'll need development. That will need funding in itself to develop that. So there are uses for that cash, which adds production ounces and adds more cash flow. So, that's certainly front and centre in the short term.
Okay, well, let's talk about Blue Spec, because I think you've given some Novo Resources shareholders a bit of a heart attack, or at least helped with that, along with Kirkland Lake and Eric Sprott selling down shares. I mean, what was the delay? Why did you need to do that?
Look, we wanted to, we had a lot on our plate getting this debt done. It's a one-page announcement, but behind that is a huge amount of work. And so we needed to focus on that. We wanted to get the scoping study complete on Blue Spec so we could, let shareholders make informed decisions on funding that. So we want to get that scoping study out next quarter, show people how good it really is. We believe it is. We will need to raise a little bit of money for that to finalise that purchase. So we want people to be fully informed to be able to make that decision for themselves.
So the time has gone out to, your first payment due now, today.
Yes.
It says. Are you making that payment?
Yes.
Right. Because they sorry, just on the debt, you're not going to see that this side of Christmas. It's being drawn down, or you'll start to draw down early to that 2021 you talked about. So you've got enough cash to make this first payment of between, what is it, 2.5 million? I understand.
2.5, yeah.
And then followed up by another 2.5 to 5 million by the end of January. So you're good for that.
Yes.
Okay, I think Novo Resources shareholders will be very pleased to hear that, indeed. And then close the whole thing by 31st of March. That's the idea.
Yeah, absolutely. And look, we are very excited about the deposit. Novo have been very good in giving that those payment terms to us, so we do really appreciate that. We are fully committed to it. We just had a lot on our plate. We wanted to stage it out a bit, so it's working well for us, and they're providing incentives to us. The more we pay early, the easier it is to finance the last bit. So, working well together in that, and we are near neighbours up in the Pilbara.
Yeah, for sure. So what now? Now you've kind of got the facility in place. You'll be able to draw money down, presumably once they've kind of been through the final stages of the DD and paperwork and checking the security component to this. That money's available early to 2021. You will start making payments this side of Christmas on Blue Spec. So it's going to take it easy for Christmas?
We'll be working right up to Christmas because you make it sound very easy, just, draw the debt down, a little bit of paperwork. So, the serious documentation starts now. I think I had a 133-page due diligence question lob on my desk on Friday, in addition to the ones we've already answered. So, no, look, there's a lot to do with operating permits, getting those in place. We've got the environmental permits now, it's the operating permits. It's a documentation of the debt. We are building on site. Lots of good photos up on our social media. Can keep track of what's happening out there on site. We'll be into bulk earthworks early next year, so there's all of those contracts, that detail getting in place. So scoping study for Blue Spec, exploration results still coming in and to be released. Lots of activity. We will have a little bit of time off, Christmas to New Year, but then into a cracking year ahead.
Right, and how much are you going to raise for the Blue Spec, or to contribute to the Blue Spec acquisition? You talked about maybe going and raising a little bit more money.
Yeah, look, we do need that to top that off and cover everything else off. Look, watch your space, how we go about it. It's a hugely volatile world we live in at the moment with gold price, stock markets. You never know what each hour of the day brings. So, no fixed and firm numbers, just it's a dynamic world we live in, so let's just play it by ear.
Yeah, just for people's benefit, so to understand how quickly these things take. So the Macquarie conversation in this gold environment was obviously with gold dropping off or tailing off as you were in those discussions. So making conversations harder? Were they less assured about the situation?
No, certainly not, because of that hedging that is there to protect their debt portion. So when they put together an offer, they've got what they call a price deck internally, and their prices they use in Australian dollars are very low to stress test your model and your ability to pay back and work out what is the minimum hedging you need to guarantee that payback. So all of that's very well protected for them. And gold would have to fall a lot further before they got nervous.
Okay, brilliant. Well, look, Dave, congratulations. Keep doing what you say you're going to do. Yeah, you have so far. Pick up the phone, let us know how you get on with that raise in the new year, okay?
Beautiful. Thanks for the time, Matthew.